Hey, I'm back with my friend Chuck from High Point Insurance, and we decided we would kind of extend out what we talked about last time. Kind of went over a high level insurance for life insurance, mortgage protection insurance, all that. So I asked him today to come with some information on really how inexpensive insurance can be for more purpose of don't not do it because you just think it's going to be so much money. So let's talk about real quick in regards to a quick rundown of what life insurance, mortgage protection insurance, what is a good reason we should have it, why people should invest in it. Give us just a quick rundown that way, and then let's talk about costs.
Okay, yeah. So the reason for term life insurance, which they also call mortgage protection insurance, is to prevent homelessness. So let's say, for example, that, and it's happened before. I've had a colleague who had this happen to him, but somebody had bought a house, and within the first month, the primary breadwinner had died. And because they didn't have the mortgage protection in place, they lost the house. So that's really, when you simplify, why do you want to spend between $1 to $2 per month to buy a mortgage protection life insurance policy? It is your way to guarantee that no matter what happens, whether you die or become critically ill, chronically ill, or terminally ill, that you'll be able to have the money to pay off that house.
And at the current moment, obviously we're not tax advisors, but at the current moment, it's not taxed.
Right. No,
The
yes,
payout of
exactly.
that.
Yeah.
So okay, so let's talk about. I mean, I'm in my mid 40s,
Hmm.
and I started at a very young age getting life insurance, mortgage,
Nice.
because I was scared to death. Like I was absolutely scared to death if something was to happen. What kind of mess? We had a young family.
Right.
We
Yes.
were really young when we started our family, and so the fact that we could leave those kids in a royal mess if we didn't have things taken care of, we luckily were smart with things like that. So let's talk about if we were 18 to 25. I don't know what your insurance ranges
Hmm.
are. So what's a range of, obviously they need to be 18 to get this insurance when it
Hmm.
comes to like me buying my own. But what's kind of the range of, okay, this is the cheapest because of the age you're at?
Oh,
Where does that
exactly.
what is that range?
So great question. So if we were looking at, say, 20-year-old, 40-year-old, 60-year-old, 20-year-old's about $1 per month. So a 20-year-old in good health with no non-nicotine user is going to be about
No
$35.
smoking.
No
No
smoking.
smoking.
But if you do smoke, right, if you wait 12 months after you quit smoking, you can get the non-smoker rate.
Okay.
So it's not,
Okay.
it's a done deal. There's, you can work with that.
All right, so that's a goal. Like if somebody's out there smoking and they want to get life insurance at a cheaper rate, then stop now. That's a good idea. Okay, so you're talking about a dollar
A
or
day.
so a day.
Yeah, yeah, $35 a
Okay,
month for a
so 35
20-year-old.
bucks a month. Okay,
Yeah.
so let's put that in perspective of I go to some coffee shop every single morning,
Right. Yes.
and if I did that 5 days a week, I'm almost my life insurance premium a month. If I
Right.
did that, and there's definitely a lot of that habitual stuff going on. All right, so let's
Yeah.
30 to 35 bucks a month for 20-ish. What happens when you get closer to the age of 40?
It's not bad. It's when you get 60 where it gets bad. But at 40, it'd be about $53 a month, so less than $2 a day.
Okay, all right, so 50 bucks a month. Now
Hmm.
we're going to our coffee shop 2 weeks in a row at
Right.
the same price. All right, so then it gets, and I'm going to bring this whole full circle. I have a good plan with this thought.
Yay.
So I'm 60 years old. I'm going to get life insurance now.
Right.
Obviously, different health conditions come into play. Usually, when you start getting up there in years, you've picked up some health conditions potentially.
Right. Yeah.
If not, okay, great. What's kind of an average? I've got decent health for a 60-year-old.
So for a 60-year-old in good health, non-smoker, the average is about $300 a month. Yeah,
Wow.
300 to 400
Okay.
per month. So that's when it goes from 40 to 60 is a huge jump.
Yeah. Yeah. Okay. So in the situation that I'm, let's say I'm 40 years old,
Hmm.
I decided I want to take advantage of my $50 a month life insurance policy. 20-year term? Is that
30
kind of,
years.
oh, 30 years.
Yeah, because most
Okay.
mortgages are going to run 30 years.
Okay, so you're going to be at 50 or 40 years old, a 30-year term. That gets you to the 70-year mark.
And by then, the house should be paid off.
Hopefully you've got the house paid off. Yeah, if
Right.
you don't refinance, you don't do anything, you are 100%
Exactly.
right. So if you're at 40 years old, just starting out a mortgage, you get a 30-year insurance policy behind that, protects you in the event one of you guys pass away on the note. Hopefully by the end of the 30 years, you have your mortgage paid off. If something was to happen between 0 and 30, you've got enough coverage to take care of it. So it's a win-win. You're really in a win-win.
It
So
is,
what
yeah.
is What is the policy amount you used on that estimation?
$250,000 is a good
Okay.
baseline.
Okay.
So,
So in my book, all right, average house prices right now, we're probably somewhere between 250 and 350 in our area.
yeah.
We get a life insurance policy at the age of 45. Our wage earner dies. We get $250,000 paid out. I owe 350. All right, that doesn't fully pay off the mortgage, but it could go a long way to just making payments
Exactly,
until you
yes.
get things settled. So even if you have a $400,000 house and you only get a $250,000 policy, you can make a lot of mortgage payments.
Right? It gives you plenty of time to make adjustments to
Yes.
bring in more income or whatever. But yeah.
Yeah, make adjustments. Get settled from your tragic event of whatever went on when you had to bury a loved one.
Right.
Okay, so at the point that we are, and maybe you don't know this offhand, at the point that we are at 40 years old and our health is maybe not perfect, maybe we've got a couple health conditions, does the premium increase a ton?
I could say between 30 to 50%, depending on how bad the health conditions are.
Okay,
Now, on
okay,
the flip side of that, there's also some people who cannot qualify for life insurance.
okay,
And those are the ones you feel sad for because if you have a mortgage, there is a need for life insurance, and it would be a shame, if you can't even qualify for it.
right,
So if
right.
you can, you should look into it, though.
Okay, so let's tackle the point that we've got a brand new family
Mm-hmm.
and we have a 2 year old, a 4 year old, and a 6 year old, and we are 30 years old because we waited a few years to have a family. This is my perfect little world here. I
Right,
just
exactly.
created just like this, my perfect little family. I can get a policy on each one of those children,
Mm-hmm.
and I can put a certain policy on there that can never expire as long as premiums are paid, right?
Exactly,
Okay,
yes.
so talk to me about that. I have a child that's 2 years old. Everything's great. All health conditions check out. There's nothing wrong. Child gets to the year of 10 and gets a curable cancer.
Mm-hmm.
What happens at that point that differs from if they wouldn't have had that life insurance policy at 2 and then they got cancer at 10? What happens when they're 20 years old and they have that in their medical record?
Well, exactly. Well, even a day after they get the cancer at age 10, they're no longer insurable. Well, some companies after 5 years, depending on the type of cancer. But that's another great, so many benefits for life insurance. One of them is guaranteed insurability. So you put a life insurance policy on the child at age 2, and then at age 10, they cannot become insurable. They still have that amount of life insurance indefinitely.
Oh, that's awesome.
Right? Yeah.
So when I did my boys, I put 25,000 on each one of them. At the
Fantastic.
time, it was for the purpose of if something was to happen. I didn't
Mm-hmm.
want the stress of burying them. Funerals are expensive.
Right? And you don't want to go cheap on that.
No,
So,
no, you definitely don't. You definitely want to give them those last memories the right way. But um, so at the age of say 20, and somebody's not married,
mhm.
but they want to get life insurance now because maybe they're a first time home buyer, maybe they're a newer home buyer, and they're just jumping in with both feet with that.
Yes.
What is your recommendation for somebody who isn't married for who they would list for a beneficiary for a payout?
Mhm. Usually family members is most of it, but now you bring up a good category because in addition to a death benefit with life insurance, most life insurance policies have what are called living benefits. So that means that if you have a $250,000 life insurance policy with living benefits for critical illnesses, which are kind of things like heart attack, stroke, cancer, or chronic illnesses, you're in a car accident and you can't take care of yourself, or your doctor says you're going to die within 2 years, the exact same $250,000 is available to you while you're alive, so that if you buy a new house and you have this life insurance policy, 6 months later you get cancer and you can't work anymore, you can file a claim against that death benefit to get the money while you're alive to at least keep paying the premiums on the house or
Oh,
the mortgage
wow.
payments.
Wow,
Yeah,
that's huge.
it's really huge. Yes, a lot of people have no clue that they can do
No,
that.
no. And I think that's one of the biggest misunderstandings is people just assume that life insurance is expensive. First of all, we can't afford
Right?
it.
Yeah,
They
a
just
buck a day. Yeah,
automatically assume that.
yeah.
And then on top of that, well, what if I never die? I've just paid all these premiums for no reason.
Hmm.
You're right, but there's so many other little directions that it could go. It's like, okay, let's protect your base right here and make
Hmm.
sure your base is protected. But what about this and what about this and what about this that just gives you so much just relaxation? What's security? What's the word?
Peace of
Just
mind.
peace of mind.
Hmm.
Yeah.
Yeah.
Peace of mind that you've got things taken care of. Okay, so here's the question that I would say people would ask. Why do I care? If I was a single person, 25 years old, didn't have children, all I had was a cat,
Mm-hmm.
and my house is $300,000, why do I care to have an insurance policy to protect that if it's just me? Who
Exactly.
cares if the house goes back to the bank? What would you say to something like that?
So if you were to die, yes, you're exactly right. It's like there's nobody who'd be responsible. You wouldn't be leaving someone else homeless. So if you were to die, exactly, not, you know. But the interesting thing is that people are surviving cancer and heart attacks more so than they used to. So it's like you wouldn't get the life insurance policy in case you died with no one to worry about leaving it to, but you would want that if you get cancer or heart attack or something while you're alive. It's like you would not want to lose that house because you can't work. It's like let the life insurance policy make those payments for you.
Yeah,
So
yeah.
that would be the reason, just for yourself.
Well, and my mind went, as you're explaining that, my mind went a little bit to the, what if you can't work? So you have the protection. Yeah, okay, fine. If I get an illness or I get something and I die or whatever, who cares? It's not anybody's problem because my credit doesn't matter, and who cares? There's not enough equity in the house to sell.
Mm-hmm.
But the problem is what happens if something does go wrong and you do live,
Mm-hmm. Right, yes.
but you live well enough that you can be on your own, but you don't live well enough that you can work a full-time job. So having one of those add-on benefits would be huge to be
And,
able to still stay in your home.
and they're free with the policy. There's no extra charge for the living benefits. They're part of the policy,
Oh, that's awesome.
right? It's
That's
like,
awesome.
it's no
Yeah, it's
brainer,
kind of
man.
a no-brainer. So
Mm-hmm.
where do you feel like, at one point, my husband's grandparents were like in their early 80s, and I thought, oh, this is really fun. I'm going to put like $1 million life
All right.
insurance policy on them, right? Because they're only going to live. The premium per month was like $2,400. It was
Right?
some ridiculous number, and I calculated it. If they lived for X amount of years, I would still be so wealthy because
Yes.
I could write a check for 100 grand. But then I didn't think that was such a good idea. But I mean, on a side note, I don't know what the
Right,
family would have thought if I would have been
right.
knowing my husband's grandparents. He had to just like tell me where to sign, Deb, because we just had a really good relationship. But
Exactly.
um, where do you think, is there ever a point that you're just too old to get a policy of some sort?
Oh, yeah. Yeah, typically about 65 to 70. It doesn't make sense financially. And then depending on the policies, I think after like 70, you can't even get it. So,
Oh, okay.
yeah.
Can you even get one, just a small little $10,000 guy to help bury you? Is there
Mm-hmm.
something like that, just enough to just help the family not have that financial burden?
Exactly. So let's say
Okay.
that 60-year-old who, if they wanted to get a 30-year, well, they would only qualify for 25 years, but if they wanted that instead of paying 300 to 400 per month, they could use existing assets and buy what's called a whole life insurance policy. So they could put down basically $5,000 lump sum, get 8 to 10,000 death benefit,
Okay.
and then it's paid off and it's done. And it beats. They're taking 5,000 of their assets instead of you picking up 10,000 to bury them.
So, where do you feel like a child is born? They
Mm-hmm.
have to be how old before you can put life insurance on them?
2 weeks.
2 weeks.
It's nice.
Okay, so a brand new family starting out that has a good home, has a new home. In most cases, you wouldn't necessarily even need a home for the purpose of having a life insurance policy.
Not
I
for your
mean,
child, no.
in my world, I'm like, yeah, buy a new home, get a life insurance policy. It needs to be on your checkoff list. But for anybody who's got a brand new family starting out, once they hit that 2 week mark, they really should be checking into some sort of policy to put on those children just to protect them for those circumstances that health conditions change that you just don't see coming.
Exactly.
What happens? Is there a situation where if a child was born with some sort of a heart defect, are they uninsurable
Mm-hmm. Well, yeah.
at that point?
Yep.
Even if a doctor goes in and fixes it and says, "Yep, everything's good," do they cease insurability at that point too?
It would depend on specific diagnosis and the outcome.
But it's more than likely it could be an issue
Yeah.
to be
Yeah.
there. Okay, okay. All right. Well, what else can you add that would help educate people to the importance of this? I mean, obviously the basics. You have a
Mm-hmm.
home,
Right.
don't leave your family homeless. You have a home, you don't necessarily die, take advantage of the living benefits. There's all these little spider webs of things, but what did we miss? What are any other perks that you want to add to this?
Well, let's go back to one of your earlier points and the fact that what if I pay all these premiums and never use it? Then in that case, you have to realize, okay, life insurance is like house insurance and car insurance. So if you buy a house with a mortgage, you have to have home insurance in case the home burns down or has damage. The mortgage company is not going to let you just take that chance as hoping you can fix it yourself. You buy a new car with a loan, the car company that you're making the payments to is going to require you to have car insurance. So you understand that because it is insurance, what you are buying is that protection. So
Yeah.
every time you drive in your car, if something happens, you're buying that protection. So with the life insurance, you have to realize you're buying protection, and great for you if you pay all the premiums and never use it, because what you have done is made sure that if something happens to you, you've got things covered.
Yeah.
You know.
You know what? And I guess that's a really good fair point.
Mm-hmm.
Is I I have paid insurance premiums on a car for over 20 years.
Right.
And in the case that I've had maybe 2 or 3 claims on a insurance policy, I've paid in a lot of premiums for the amount of money that I've taken out. So
Right.
yeah, I guess that's really the way to think about it. It's just one more insurance that it protects so much more. Like I have a depreciable asset with my car, but I'm still
Right.
required to have, I guess our bodies are depreciable assets as
That's true too.
well, too,
Yes.
if you look at it
That's why it
over
goes up every
time.
year.
They're slowly going downhill.
Yes.
Slowly.
Yeah.
Okay. All right. Okay. All right. I think this is good. I think that the thing that I just want to drive home is the younger you are, more than likely the cheaper it's going to be. So the
Exactly.
faster you get it, the better off you're going to be.
Oh yeah.
And unfortunately, I don't want to bash any type of anything, but we're putting a lot of crap in our bodies. Energy drinks, fast food, all the stuff that is just going into our bodies, we're
Right.
not doing any good for them.
Right.
So our bodies can be preserved longer because of all the medical science that's out there. But when it comes down to it, we're better off to get ahead of the damage that we're doing without realizing. My Dr. Peppers all day is probably not going to help me at the age of 60. It's probably not a good idea. But
exactly.
anyways, okay. So really to just drive the point home, it is just the sooner you get it, the cheaper it more than likely will be. The more insurability you probably have because
Exactly.
you've got, just some of those things that just come with age. So it's definitely critical to stay on top of that. So number one goal is as soon as you buy a house, just making sure that you have that as part of your list as
You have
to-dos.
house insurance, you'd have mortgage protection, life insurance. They should be, synonymous.
Yeah, I get them right there together.
Yeah.
Oh yes.
So instant leverage, right? So a lot of people don't realize that with life insurance, the power is in the leverage. You are never going to pay more for that policy than you're going to get from that policy. But the nature of life insurance is once you have an approved life insurance policy and you make 1 month's premium payment, you have access to the entire death benefit. And there have been times to where somebody could have a $500,000 policy. They've made one $100 premium payment. So it's $100 out of your pocket. You die, your family gets the 500,000.
Oh, that's
instant leverage. It's not like an investment that you have to wait for over time. It can go up or down. This is day one coverage for very leveraged money.
Yeah, that's really that's a very good point to think about too. Is it is I'm sure there's plenty of court hearings that miraculously somebody died one day after their life insurance policy went in place. Yeah, that would be a fun thing. But okay,
But
all right.
the other thing to think of too, right, is like run through the scenario in your head. So, when you go home tonight, it's okay, if I didn't wake up tomorrow and I was gone, right? How would I feel knowing if I was still here as a ghost or whatever, that my family has to move out of the house, that now they're hoping to live with relatives, or sometimes to become homeless? What kind of a man, if I'm in charge of this family, am I really if I'm willing to let my family suffer because I didn't get around to getting the life insurance?
Yeah, I didn't make that call. I didn't.
Mm-hmm.
I didn't do that simple. It's got to be pretty simple now. You can just jump online and do so much probably online, right? And jump on a Zoom call with you or whatever. If you don't have time to meet in person, phone calls go a long ways, and you can get a lot of stuff done that way.
Well, we do a 20-minute phone call. I gather the information. If you're talking a small policy for a younger person, a lot of times they're automatically approved in a couple of days.
Yeah, and then you're up and going. Make that first premium. Okay, all right. Well, anything else you want to add? Anything else you can think of that we need to throw in here?
Those are the main points, is that it's instant protection, it's leverage money, and it's making sure that if something happens to you, you're not leaving that burden on your family. Is that they're still going to stay in the house, they're going to have the money to keep on paying the bills, and if you have enough life insurance, send them to college or whatever. But it's you doing the right thing. It's you being responsible, not passing the buck because you never got around to getting it done.
Yeah. Just take that as a responsibility. Part of your responsibilities is making sure you've protected all of that. Yeah.
Exactly.
Okay. All right. Well, I will post Chuck's information so that you can get in touch with him. He can go through everything with you and just give you your coverages and premiums and options and all the different directions of things that can be added and just make sure that you're protected, because that is definitely a needed thing. So thank you for taking the time with me.
Well, really thank you for promoting this because it's so important and it's great to see how much you truly believe in making sure this information gets out. That's really cool of you.
Yeah, yeah, that's awesome. That's awesome. Okay,
Yeah.
till we meet again. Have a good night.